Good afternoon, Dr. Islan, distinguished guests, ladies and gentlemen, and welcome to the second Malaysian Sustainable Finance Initiative CEO Roundtable. My name is Nabina and I represent Capital Markets Malaysia, or CMM. In July 2020, CMM launched the Malaysian Sustainable Finance Initiative to support the advancement of sustainable finance amongst Malaysian financial sector intermediaries. The MSFI, as it's called, is supported by the Capital Market Development Fund and the UK government through its ASEAN Low Carbon Energy Programme. And since its inception, it has delivered capacity building programs on sustainable finance for various segments of Malaysia's financial sector. The MSFI Steering Committee comprises of all the banking and finance associations in Malaysia, which include the Malaysian Association of Banks, the Association of Islamic Banks in Malaysia, the Venture Capital and Private Equity Association, the FinTech Association of Malaysia, the Malaysian Investment Banking Association, as well as the General Insurance Association of Malaysia. The MSFI Steering Committee is chaired by the Securities Commission, and it is our pleasure today to invite the Chairman of the Steering Committee and Chairman of Capital Markets Malaysia, Dato' Zainal Islan Zainal Abidin, to deliver the welcome address. Dato' Islan, over to you.
All right. Thank you, Nabina. And good afternoon, ladies and gentlemen. Welcome to the MSFI's first engagement for the year. And on behalf of MSFI as well as Capital Markets Malaysia, I would like to thank all of you for attending this event. My deep appreciation also goes to the panel speakers who will be sharing their thoughts and views with us shortly. Today, we have invited a distinguished panel representing the various segments of Malaysia's financial sector to explore how we, as a holistic financial ecosystem, can further advance climate finance and sustainable finance in Malaysia. In November 2020, the MSFI hosted a roundtable during which leaders from the Malaysian financial industry discuss the commitments they would make towards advancing sustainable finance within their respective organizations and supporting the government's Paris Agreement commitments. Amidst a rapidly evolving sustainability landscape, we are gathered again today to discuss the traction achieved in the last 15 months. I understand that some of today's panelists will be updating on the progress they have achieved since making these commitments. I'm sure we are all looking forward to hearing about their experiences and exploring how we can harness the progress further in our collective quest to continue developing climate and sustainable finance in Malaysia. Since the roundtable in 2020, the government of Malaysia has announced several key initiatives in respect of sustainability, including its aspiration to achieve net zero greenhouse gas or GHG emissions as early as 2050. Although Malaysia accounts for less than 0.7% of global GHG emissions, the government remains committed to reducing the intensity of its GHG emissions by 45% based on GDP in 2030 compared against 2005 levels. This revised target is 10% higher than the earlier target. As part of its sustainability commitments, the government will also no longer build new coal-fired power plants, which currently account for some 40% of the nation's total electricity generating capacity. Moreover, a comprehensive national energy policy will soon be launched, while carbon pricing and a carbon tax will be introduced together with other carbon reduction measures after a review of low carbon development strategies by the end of this year. Under Malaysia's power generation plan, the proportion of renewable energy as part of the country's installed capacity will be lifted to 31% by 2025 and 40% by 2035. Interestingly, Malaysia is ranked 21st among the top 25 performing countries in KPMG's inaugural Net Zero Readiness Index, which compares the advancement of 32 countries in lowering GHG emissions that cause climate change. Apart from the 25 performing countries, another 7 countries to watch were selected for the index. The index evaluates a country's preparedness and ability to achieve net zero by 2050, with the component countries chosen from a lineup of developed and emerging economies, as well as energy exporters, and further identified based on national preparedness and sector readiness. Malaysia is recognized in the report as already having in place some strong initiatives supporting its progress towards net zero. In the private sector, several early adopters have made laudable commitments, including Petronas, which declared in October 2020 its aspiration to achieve net zero carbon emissions by 2050, making it the first oil and gas company in Southeast Asia to set such a target. A number of public listed companies have also pledged their commitment to net zero. However, there is room for improvement. According to PwC's latest annual Global CEO survey, based on responses of 49 Malaysian CEOs, 18% have made net zero commitments compared to 26% for the overall Asia-Pacific region. Furthermore, only 38% of the 18% have or will have science-aligned commitments versus 71% for Asia-Pacific. Ladies and gentlemen, for the financial sector, the Joint Committee on Climate Change, or JC3, is an important platform for regulators, namely the Securities Commission and Bank Negara Malaysia, to pursue the sustainability agenda with financial institutions and intermediaries, particularly on managing climate-related risks. Among its recent initiatives, the JC3 issued the reference guide on climate risk management and scenario analysis for public consultation in December 2021. The guide will require financial institutions to integrate climate-related risk considerations in their business and risk strategies. Under the SC's Third Capital Market Master Plan, or CMP3, launched in September 2021, among the key focus areas are transition finance and Islamic social finance. The development of transition finance, in particular, will facilitate and accelerate industries and businesses' shift towards less carbon-intensive and more sustainable practices. At the same time, expansion of the Islamic social finance segment will provide greater impetus in driving efforts towards achieving social objectives, including those under the SDGs. The present ecosystem will be enhanced so that it can support the transition to a more inclusive and sustainable economy. The CMP3 provides the roadmap towards this goal, laying the foundation for the next phase of evolution and growth for the Malaysian capital market. One of its key development objectives of shaping a stakeholder economy with effective capital mobilization through sustainable and Islamic capital market solutions is complemented by a regulatory approach that will embed shared accountability in the capital market. The CMP3 is designed to actively and strongly support Malaysia's sustainability aspirations, with the capital market serving as one of the key enablers for economic structural reforms. Ladies and gentlemen, as most of you would be aware, sustainable finance has been gaining traction in Malaysia since 2014, propelled by the introduction of the SC's Sustainable and Responsible Investment, or SRI, Sukuk framework, as well as a slew of government and regulatory measures and incentives since then. Sukuk totaling 8.3 billion ringgit have been issued under the SRI Sukuk framework to date. The funds raised have been channeled towards the financing of green, social, and sustainable projects, including renewable energy, quality education, and affordable housing. With greater level of awareness, as well as commitments and indeed pressure, issuance of SRI Sukuk and green, social, and sustainability bonds is expected to pick up pace. Identification of green and other sustainable assets and activities become increasingly important to ensure that the financing is true to label, hence providing confidence to the market and thus attracting more investors. To address the risk of greenwashing, the market needs a credible and transparent common language on sustainability. Under the circumstances, a sustainable finance taxonomy represents a tool that can define what constitutes sustainable economic activities. In consonance with this, the SC recently published a consultation paper on a principles-based SRI taxonomy for the Malaysian capital market which aspires to provide a more holistic view of sustainability via the establishment of guiding principles on economic activities that support ESG objectives. The SRI taxonomy includes a social component to manage social risks and elevate social standards. I would like to encourage all stakeholders here today to submit your views and suggestions on the paper by end of this month. As evident from the many initiatives and concerted efforts by numerous quarters, climate change and sustainability are indeed pertinent and pressing topics that must be addressed through concrete actions. We must therefore answer the clarion call of duty to resolve these issues, or at least in the interim mitigate their potentially dire effects. To this end, the SC is firmly committed to building a more inclusive and sustainable economy, among others by enhancing access and solutions through the capital market. On its part, the MSFI has organized capacity building programs that have focused on the structuring of innovative sustainable finance instruments for investment banks, the private market, and the fintech sector. In this regard, I'm also pleased to share that the MSFI has been globally recognized for its work through the conferment of the International Standards of Accounting and Reporting, or ISA, Honors 2021 Special Recognition Award in October 2021. Ladies and gentlemen, just as global financial institutions that collectively manage $130 trillion made significant commitments towards green financing at COP26 last November, it is similarly important that the Malaysian financial services industry drive further development of the climate and sustainable finance ecosystem in the country to ensure that availability of and access to such financing cater to the needs of all parties that contribute to the national sustainability targets and ambitions. I am confident that our engagement today will be able to set us in the right direction towards attaining our stated objectives. With this, I wish you a productive and insightful session. Thank you.
Thank you very much for that, Dato' Islan. Ladies and gentlemen, we're going to get onto the roundtable portion of today's engagement. But before that, I'd just like to mention some housekeeping details. The roundtable will last for an hour, 15 minutes. And if you'd like to pose a question to any of the panelists or to the moderator, you just need to click the Q&A box that you'll see at the bottom of your screen. At the end of the session, which will end at 5:30, you will see a feedback form pop up on your screen, and we'd really appreciate if you could take the time to just fill that out. So now we have a roundtable comprising 9 key stakeholders within the banking and financial sector. And moderating this roundtable for the final time as General Manager of Capital Markets Malaysia is Zalina Shamsuddin. Zalina, over to you.
Thanks, Navina. Good afternoon, everyone. Thank you very much for joining us. It gives me great pleasure to be moderating such an esteemed panel of speakers. The last time we had this conversation, it was November 2020. And at that point, ESG was playing a very interesting role in Malaysia. We had just started the ball rolling, and 15 months later, we seem to be progressing quite well. Without much ado, what I'd like to do is call on our speakers to sort of give us an overview of what has happened in the last 15 months or so. We have a great range of speakers here. We have 2 international banks, 2 leading banks in Malaysia, a developmental bank, an insurance representative, and we also have the private markets, which are starting to play a bigger role now in the area of sustainability. Maybe I could start the ball rolling with Dato' Sharon. As a put you on the spot there.
Sorry.
As a developmental bank, I think there's a lot more onus or perceived onus on developmental banks to do more than other financial institutions. What are your views in this space in terms of where Malaysia has been in the last 15 months? What has MIDF done in the last 15 months?
Gosh, thank you, Zalina, and thank you to CM2 for CMM rather for inviting me to talk on this panel. We are both a development finance institution in the sense that we provide development finance, but we also are an investment bank and an asset management company run on commercial lines. But in all three, we've really put green at the forefront. We want to be a value-based intermediary, and that means partly being Islamic bank, but also taking also other considerations, for example, especially ESG considerations. And I say ESG because I think the social and the governance parts are just as important as the E part. The Bank Negara taxonomy. I love that word taxonomy, actually. Something you do with animals and flora and fauna. It's very green to have a taxonomy. But the Bank Negara taxonomy talks about climate change taxonomy. So while carbon is obviously important, our idea of ESG goes beyond carbon. It's also environmental in general, and social and governance. And of course, Malaysia has got a lot of bad, well, actually not just bad press, but we deserve it really for kind of the social problems we found in some of our companies. We've made it into the US child labor and forced labor list. We've made it into the trafficking in human persons list. I mean, not things to be proud of. But so we think, S is as important as E. In fact, they're all very important. And as a development finance institution, what we do is we get money from the government and we help the government give out funding. So obviously on the previous mandates we have, we can't really put ESG as a condition because that wasn't within the mandate when it was put in the relevant Malaysia plan. But having said that, we then we provide financing mainly to SMEs, and SMEs aren't the big culprits when it comes to carbon. It's the bigger companies which do it. We don't SMEs don't burn coal, SMEs don't produce cars, and et cetera, et cetera. So we've been fairly fortunate. Of course, there are some S problems in some of the factories, and as far as we can, we make sure that all the factories comply with all the relevant labor laws and things like that. But I'm glad to say that we do have a fund devoted to development of green initiatives. So if any SME wants to do something green, I don't know, put solar panels or do something which makes it more green, environmentally friendly, we do have a fund especially for that. And the investment bank side, we've also done a lot in terms of funding and arranging financing for green projects, renewable energy in particular, but also buildings which comply with all the green building standards. So we're doing quite well there, and I think the market has accepted it. And the great thing is, all new promoters coming up with new projects which require funding always put ESG at the forefront, and they want to be E, they want to be green, and that's good. So it's not a hard sell. Once upon a time, it may have even been a hard sell to tell people to be ESG, but now it's very easy to do, and they understand that if you have a good green project, it's that much easier to get financing compared to a dirty brown project. And similarly, with our asset management, we've also launched an ESG fund, which invests in Malaysian companies. It's unlike many of the others, which is a global ESG fund, invests in Malaysian companies. And we're fully aware of this greenwashing issue, and we're trying to make sure that when we say it's green, it is green as far as we can work it out. So that's where we are at MIDF. And you're right. I mean, over the last 15 months, things have changed a lot, and people are becoming more green conscious. Although, we are becoming green conscious. I'll come back to the level of green consciousness later. I'll stop here, and we have time. I'll talk a little bit more about how green conscious everybody really is. But it's good. It's good. I mean, there's been a lot of progress, incredible progress in the last 15 months. So thank you.
Hi, thank you, Dr. Sharon. You touched on two interesting points that I would like to sort of pick on: SMEs and Islamic. I think you're right. SMEs may not play a bigger role in the sustainability agenda, but the thing is, they make up Scope 3 emissions. They are the supply chain, and I think it's critical that we bring them into the conversation and work on them as well while we're working with the larger organizations. On that note, if I could bring in Hussam. Hussam, thank you for joining us today, Hussam. I know CIMB has done a lot of engagements in the space of sustainability, and I believe you are working with SMEs as well. Could you just share with us what CIMB has been doing in this space for the last 15 months? You're on mute, Hussam.
Yep, I realized. Thank you so much, Zelina, and thank you for your leadership as well in this space over the last few years. You will definitely be missed. CIMB has, obviously, to your earlier question, what has happened in the last 15 months since the last roundtable? Globally, obviously, the COP26 and its implications. For the first time, supply chains and trade routes are mentioned and emphasized. That has a large impact and a huge impact on large corporates and SMEs. And also in Malaysia, if I go down, zoom further, in Malaysia, we've had the Bank Negara climate and principle-based taxonomy. Definitely that will have also another transformative impact on the way we do business and the way financial institutions interact with their customers. And then if I zoom further into CIMB, our institution, we've launched a number of initiatives, and also we are doing a lot of adaptation to this. When COP26, one of the statements that came out of at the end of the report, at the end of the conference, in one of the reports, is that every company, every business, every financial institution, every bank, every insurance company will need to change. It's no longer a competitive advantage to do a change or to adopt ESG, but it's a must. Further, another report also came in November last year, Boston Consulting Group with WWF, talking about Malaysia's net zero journey. And one of the early statistics they mentioned is that 70% of Malaysia's trade partners, countries that buy Malaysian products, have net zero commitments, which means that 70% of our exporters at some point in the near future will start to face some scrutiny. They will have to comply with some standards. They will have to be filtered through some lenses, and they will have to be examined against internationally accepted standards of ESG. These are huge changes that happened in the last 15 months. In CIMB, what we did before that, in fact, we started this journey with SMEs and exporters just before the pandemic. In February 2020, we launched together with Matrade what we call the SME Sustainable Exporters Program. What we thought will be useful at that time is to run a few workshops, educating, not through us, but with our partners, educating SMEs as to the implications of what is happening globally, how these changes will trickle down to all and every SME, and all and every SME that is engaged in export internationally or domestic trade. At some point in time, they will have to look into that and do something about it. SMEs, obviously, for the lack of resources, they may need some help in understanding what that means to them in their sector, in the relevant sector, be it manufacturing, agriculture, food and beverages. How do they start about it? What's available for them to clean their act and to start thinking like that? So that was the thinking behind our approach. Then COVID hit us, priorities changed. Sustainability of the businesses themselves as businesses took over as the #1 priority before anything else. Nonetheless, we continue to develop certain tools, and we've developed one of our tools there to enable SMEs engage meaningfully in the discussion called Green Biz Ready. The idea here is that SMEs can go fill in a questionnaire. The 2 stages. Stage 1 is a very basic questionnaire, and that will give them a report free of charge, and that report will enable them to identify areas of their business operations that are climate sensitive or have some, identify areas of risk. If they like that, if they want to go further, they also free of charge. That will enable them to have another report to highlight further areas of development, what could be done, suggest a few recommendations, and also enable them to start that journey if they wish to do so. We thought that there would be no other way to help SMEs but to get involved with them and to enable them through some of these tools and financial products. I mean, financial products are financial products. My view personally is that there's no such thing as green financing, but there is financing that could be used for green purposes. So banks have always been able to offer their loans and financing products to their customers. So how do we enable SMEs in particular, which make up 98% of businesses, employ 70% of the workforce, and contribute 40% of GDP, to start looking further and seriously into this transformation towards becoming more ESG compliant. So these are, in brief, what happened with us in the last 15 months. Okay. There's more I can talk about us as CIMB, what have we been doing internally, but I will leave that to a later point, maybe, perhaps.
Okay, thanks a lot, Hussam. But, interesting point you brought up, and about how, they're always, in the last 2-3 years, given with COVID and all, we talk about, there was a focus on climate change, but now we're focusing on sustainability of businesses because of the disruption to global trade and stuff. But I think the recognition is fast arising that climate change is critical for sustainability of businesses long term. It's a very relevant risk, and it's not something that it's not a nice to have anymore. They're real physical and transition risks. And so it needs to be taken into account when you're talking about long-term sustainability of any business. On that note, if I could bring Dato' Fadil in. Dato' Fadil, could you please share with us what Maybank has been doing in this space?
Thank you, Zalina, and good afternoon, everyone. Once again, thank you for inviting Maybank Investment Bank to be part of this roundtable. Since the last roundtable in 2020, Maybank Investment Bank has evolved alongside our parent Maybank. As you may be aware, sustainability clearly is one of Maybank's strategic priorities, and that falls under our M25 5-year plan. And one of our sustainability commitments is to mobilize 50 billion ringgit in sustainable finance by 2025. So as an investment bank, sustainable finance is certainly an area that we can play an active role. In the last 12-24 months, clearly we have played a very active role in intermediating between providers of capital and recipients of capital. And we were the main distribution bank for the government of Malaysia's Sukuk Prihatin. We supported SME Bank in its maiden 500 million sustainability Sukuk issuance. Recently, we supported MBSB Bank for its first sustainability Sukuk program, which is also the first in the world by an Islamic bank. Internally at Maybank Investment Bank, we have established a dedicated sustainable finance team to guide our clients through the end-to-end process of sustainable debt financing. And that would include structuring debt financing transactions in the bonds and Sukuk space, connecting them to ESG investors, assisting them in compliance to market guidelines and recommendations for market best practices. So 2022, which is the second year in our 5-year plan, we will continue to push into capacity building at all levels, using sustainability first approach to help our clients to green their portfolios and also their business activities. And of course, further explore product innovation, such as sustainability linked structures and instruments. So just to close up this point, we aim to make ESG related investments more pervasive and accessible to our clients. Thanks, Zarina.
Thank you, Dato'. Before we go on to the private markets and insurance, which is an area of growing interest now, what I'd like to do is I'd like to invite Mac and Amir, two international banks, Standard Chartered and HSBC, who have had a huge inroads in the space of sustainability globally. I'd love to hear your views on major achievements in your respective financial institutions and what you think your respective financial institution will bring to Malaysia and share. So can we start with Mac first?
Sure, Zarina, thank you, and thanks for inviting me. And it's great to be back after a year and a half. We've just some numbers as from November of 2020 when we first met till now, we've deployed currently we have $9.3 billion of assets globally for the bank deployed. That's an increase of about 140% from where we were in 2020. Here closer to home here in Malaysia, we've also increased our asset base significantly. We've got about close to $400 million of assets deployed in this sector. So we've we've kind of made great strides. As you said earlier, 2019 things were still very nascent. But all I can say is in the last 2 years, the only thing that's accelerating as quick as Omicron or inflation is ESG. And clearly, it's moving at a very rapid pace. And currently, I guess the world is toying between, how do you manage inflation? How do you manage Omicron? And obviously with ESG being a very key theme. We've estimated that by 2030, to meet 2030's SDG goals, there is a gap, a shortfall in global funding of $10 trillion. So that's a big number. And as a bank like ours, we operate across 59 countries, majority of that in emerging markets. We are right at the epicenter of what's of all of this. And with the 59 countries, only half of the countries that we operate in have a net zero policy. So it's interesting that a lot of the emerging markets are still very far behind. The African countries are still very far behind. In Malaysia, we've like what Fadil was talking about at Maybank and so on. We've done a lot of firsts, and I guess a lot of us will be doing a lot of firsts because it's kind of very new in the last in the Malaysia context. So we've done we look at it from a trade finance perspective. We've done vendor financing, Sharia compliant, sustainable vendor financing for a GLC. In the markets, we've done ESG-linked derivatives, cross-currency swaps, and in capital markets, we've done ESG bonds. But what's important is also the social angle. And I think a lot of focus on the E, but the social angle is a little bit missing. We had a global fund of $1 billion in Malaysia. We deployed a small portion of that towards COVID funding, and we also helped a key pharmaceutical company here in Malaysia procure vaccines. So we've done a lot, and I think a lot of organizations you speak to will have done a lot from an E perspective, and a lot of that will be a kind of first. But we have a long way to go, and the bigger concerns that I do have, and Sharon talked about it, is the S part. Is that social piece that seems to be, we're the poster child in the US for the right or wrong reasons. But I would like to kind of dig a little bit further into that, just to understand really, how do we really move? Are the regulations aligned with where we should be? Because many of these companies are in compliance with local laws, but they're not in compliance with international standards. So we are faced as an international bank operating here. We're governed by the lowest common denominator, and we're always faced with that predicament, where we have goals we have to achieve, but then again we also appreciate the nuances on the ground, and it's difficult. Sometimes when these things happen, a lot of the people are marginalized in many ways. Then it's not necessarily their fault, but the consequences of some of these actions could actually be quite severe. So we should kind of think around how this develops, and maybe if we do speak again in 2 years' time, maybe we'll see a lot more kind of the S part of the of ESG being a little bit more advanced. Maybe I'll just pause here and then kind of pass it over to the other speakers.
Okay, thanks, Mac. We're definitely coming back to Dr. Sharon's point. I think that's going to be the highlight of this discussion. But before we do that, Amir, could you share with us HSBC, and given the fact that you're an Islamic bank, is there a difference in your approach in Malaysia?
Okay, thanks, Alina. Assalamu alaikum and good afternoon to everybody. So, globally, I mean, if I can just touch briefly on global before we go into the Malaysia operations, because, it sort of resonates as a group, what we're trying to do. So most recently, we, along with a lot of other banks, have announced that we will be net zero in our operations and supply chain by 2030, as well as in our finance emissions by 2050. In addition to that, we've committed up to 1 trillion of financing over the next 10 years to support companies' transition to a lower carbon economy. And most recently, we've sort of updated that commitment to get down into two specific sectors, one being oil and gas and the other being power and utilities by 2030. And what that additional commitment was that we would commit to 34% reduction on a balance sheet financed emissions level for the oil and gas sector by 2030, and a 75% reduction on the balance sheet finance emissions intensity in the power and utility sector by 2030. In addition to that, we've also committed, similar to the government of Malaysia, to phase out thermal coal financing in a net zero line timeline. So, very clearly, this is a just transition. We're not all clamoring for the door, so to speak. So in a way which enables us to assist our clients as well as the countries support a just transition, especially in the emerging market scenario. So how do I translate that to a Malaysia context? So especially from an Islamic banking lens of view. So HSBC, Amanah, and some of the colleagues on the call were formerly with us as well, so they can attest to that before I took on the role. We were one of the earlier pioneers of the community of practitioners for value-based intermediation. And with that, that was where we were before. And if we fast forward to where we are today, pursuant to 2020, we've made significant strides in further expanding and sort of, going down that road a bit more further. One of which was our TCFD declaration, which we made in 2021, which was, first for any financial institution in Southeast Asia. And what we currently are working on is what we call Project Cocoon. And what Project Cocoon is really, it's a 24-month ambitious program to convert, it's not only a financial matrix sort of tagging process, but it's also a cultural transformation, which includes, capacity building, engagement with stakeholders, training and development, and also financial products. But at the crux of Project Cocoon really is a ambition for us to tag our assets, which as of 31st January 2022 stands at about 13.3 billion ringgit in the Islamic book. So the ambition is to have 51% of that 13.3 billion or so in alignment with triple bottom line concept, which is what the value-based intermediation is all about. So what does that mean exactly, right? So if you look at our book, if you look at financing book of any other bank for that matter, it's mainly skewed towards the retail segment. So if I look at my balance sheet, 60% or so is in the 45% is in the retail arm, and the remaining 55% is in the wholesale arm. So we were talking a lot about the E and the S and G, and when you look at the retail arm and you try to break that down into what is really triple bottom line, who are we financing, in terms of the economic status of the borrower, what did they use the money for? Did they use it to sort of further their child's education? And in terms of the mortgage book, which is the significant component within that 45%, what were the borrowers doing? Were they buying a house for the first time? Are they B40? Are we supporting them in terms of home ownership? So that's what we're doing on the retail side to try and break it down into a certain classification, who actually qualifies as triple bottom line, in line with people, prosperity, and the planet. And on the wholesale side, we are similarly adapting an ESG lens, and it's ES and G that we are looking at as well. But particularly when we hit some of those sectors which are a bit more E concerning, we have a higher threshold for those who can be included. So Zalina, that's what we are doing currently in terms of breaking the book down with the ambition to hit a 51%, hopefully by this year, or if not, as soon as possible. And to speak to some of the products that we've done. I mean, I don't want to go too long on that, but we have done within the Islamic space, the first green trade financing for Synergy. We did a really nice transaction for Guangchong, which was for sourcing sustainable cocoa. So they needed to get a second party opinion that the sources of the cocoa was from sustainable sources. And for Yinsen, we started with a sustainability linked sukuk in 2020, but in 2021, Yinsen wanted to move even further. And I assure you that the KPIs, attached to Yinsen sustainability linked sukuk were ambitious and very hard to achieve. So they issued a 1 billion sustainability linked sukuk, and they have 3 KPIs which they need to meet by 2024, failing which there will be a maximum 25 basis point step up in their coupon rate. And then finally, obviously, the government of Malaysia last year came to the US dollar market with the world's first sustainability sukuk. And again, it was not an easy transaction, not one that needed, to be dived very deeply into what actually meets, potential use of proceeds. I can assure you that the international second party providers, there's a lot of debate about what we may think should qualify and what they think disqualify. So that was, that was something that was well executed. And just to sign off on the retail products, so we've got an ESG credit card where the bank will match any donation made to 3 eligible recipients. So any donation made, we will match it by 1%. And we're currently working on another, we're currently working on a slew of structured investments which are linked to ESG, as well as green deposits and green mortgages. So, inshallah, it's the road ahead is there for us to achieve, and inshallah we will achieve those outcomes in support of our own ambitions as well as the country's.
Thanks, Amir. Amir, if I could quickly ask you one question based on what you said. When you said from a social point of view, you break down your balance sheet to see what was the purpose of the retail loans and stuff like that, right? So what if they're doing it to educate their kids or to buy their first home? At the end of the day, doesn't it boil down to credit risk, right? Will it make a difference in your decision making and providing that financing?
Okay, so first step, what we're doing essentially is, existing book. What does it look like now? Without going into any programs to support any particular communities. So the first thing is that we break down what did they actually use the money for,
okay.
And that's how we are sort of trying to classify who did we lend to, who was high net worth individual, for example, versus who used the money for something which we can align with one of the UN SDGs. So moving forward, once we achieve that target, inshallah, of 51%, then we have to apply that lens moving forward, because we would need to monitor the book on an ongoing basis to make sure that it doesn't fall below 51%. And if it does fall below 51%, what are the plans to remediate that back up to 51%? Similar to, a green bond or a green sukuk that you would do, you would have, 100% utilization of proceeds. And that could, some of those, especially for a financial institution, some of those loans could mature during the course of the tenure of the sukuk. And then you would need to originate new assets to top them up. Otherwise, you would face a reputational issue.
Okay, so we haven't moved away from a credit risk criteria. We are still looking at credit risk criteria, but this could possibly change going forward.
Yeah, Zalina, maybe I'll just add on that point. Credit is always one of the biggest hurdles for banks like us. But returns is a big one, and nowadays we are dancing between credit and returns because of the obsession for ROTE and all that kind of stuff. So when it comes to where financing has high social element, we are willing to sacrifice economics. Okay. And that gives us a lot. And then in terms of credit terms, we're also willing to be a bit looser in terms of the covenants and stuff like that. So it gives us a lot more flexibility. We with the COVID funding that we did to a lot of the organizations, it was actually ROTE negative. A long story how you get to ROTE negative, but we were basically funding at cost, and it was it was capital destructive for us. But we did it, and we gave very light terms because we know that there is a benefit. So we adjusted from that perspective.
Okay, great. Thanks, Mac. I think that was the direction I was trying to achieve, in the sense that I think my ambition for the financial sector is we start looking at financial returns and try to articulate in returns on a more wider base beyond numerical returns sort of calculations, and start looking at other non-numerical returns as well. Because I think that's the only direction that we have to go to hit that 10 trillion sort of target. But thanks for that. Now I'm just going to bring in the last two speakers so that everyone has a say, and then we'll go into the meaty stuff. Paul, what I'd like to bring you in is, Amir was mentioning about how HSBC is taking a role. And I think most of the financial institutions are now starting to say, okay, we're going to reduce lending to sort of oil and gas, coal, and start looking for renewable energy and stuff like that. But the issue at hand is, these are the cheapest sources of energy, right? So if we're going to start phasing out these cheaper sources of energy, we're going to have to start investing in alternative forms of energy that require a lot of financing and capital, which the financial sector per se, I mean, the banks and the are not able to do and to sort of lend to. And this is where the private equity market has got to come and play a role. I mean, we're talking about innovations, we're talking about new technologies that are high risk, high return sort of portfolios, which very much falls in your space. What have you seen in your space? And don't you think it's time for the private markets to sort of step up and do more? That's a loaded question there, Paul.
Yeah, thank you for giving me the easiest question.
You're welcome.
No, those are great points. And it's probably worth reiterating some of the points that were made earlier around sort of frameworks and taxonomy on ESG and sustainability. Because again, climate specifically is really just one element within the broad umbrella of sustainability. And so even if we're, for the purposes of this conversation, we're looking at climate and carbon reduction, emissions reductions, GHG, I think there are several ways to tackle the problem. Obviously one is, is really through carbon reduction, either at the source, some sort of carbon capture, or some sort of air capture technology, so capturing carbon that's in the air. So those sort of direct reduction solutions tend to involve obviously incredibly large amounts of scientific and technology innovation, and that type of funding, the type of funding required for those types of technologies, actually do require those that have a very big risk appetite, but also a really extensive time horizon, because some of these technologies might take quite a bit of time to pan out. So, again, if we look at the spectrum of public or private finance and private equity, I operate at the venture capital scale, so really at the really early stage of venture funding, which traditionally hasn't looked at these types of investments simply because the amounts of money required and the time horizons needed could be probably more than many VCs can chew. And this is where you're starting to see a lot of thinking around more creative types of blended finance, sustainable finance. If you rely purely on private markets, I think private equity investors, VC investors haven't traditionally come into this space simply because, I think the private incentives alone were probably not enough to incentivize them to come in. That's where you're starting to see a lot of, government finance coming in with sorts of incentives or instruments or, sort of, first loss instruments that sort of de-risk for private investors. As these types of companies get bigger and they start to scale up, and you're looking at probably bigger check sizes, that's where you're probably starting to see the more traditional private equity investors. It's one of those things where the greatest need is probably at the earliest stages of venture, but where you're starting to see how ESG and sustainability filters into the finance world. A lot of it has traditionally started with public markets and large cap private equity, and it's now filtering down into mid cap or early stage startup funding. So it's just this weird mismatch where the waterfall is starting from public and large private down, but where the need is actually at the earliest stages for this type of financing. So we're hopefully getting to that point where those two trends intersect. But it does highlight the need that the greatest areas of technology innovation are the ones that are probably most starved of capital. And so if we look at where the VC space is, and as distinguished from private equity, so Gobi, we operate in that sort of seed stage, early, some growth, usually first or second checks in. For most traditional VCs of this sort, ESG is incredibly new. I'm surrounded by financial institutions here on this panel that have had decades of experience in sustainable finance. Our pioneering some really incredible, sophisticated instruments. In the early stage venture capital space, a lot of us are really just trying to understand, the context, the definitions, the taxonomy of sustainability and climate and ESG. So, you're not going to see that many venture capital firms active in Southeast Asia that have had a very long track record, not just in climate, but ESG in particular. So, this is still a very, very new trend for us. Many of us are at the very beginning of what will be a long-term transformational journey. Now, that's not to say that there aren't specialist funds. There are funds that specialize in climate, and they've got folks on board that have a deep history in funding climate tech, green tech type of investments. You have specialist funds that will focus on gender. You'll have specialist funds that'll look at blue ocean technologies, ocean cleanup, circular economy funds. Very specific thematic funds.
But not big ticket items.
Yeah, so I think what we're starting to see now is over probably in the last 18 to 24 months, funds like Gobi, and we're not the only ones. We're part of a small cohort of traditional institutional VC funds that are now starting to think about how do we integrate, ESG into our investment and operational activity. How do we work with startups, not just work with startups, but educate startups. Most startups, I think it's been mentioned both on this panel and I think in some of the Q&A that's been posted, is the lack of resources that SMEs and startups, I should include startups in that, have around ESG. And it's not even just a lack of resources; it's probably a lack of understanding. Not knowing what these terms are, how to execute on them. And that's probably where you're going to find some of the root causes of impact washing and greenwashing, at an early level, because you have a lot of companies who don't understand what ESG is and impact. And so they are implementing programs that they may not fully understand, are these really impact, are these ESG, are these sort of more marketing and promotional gimmicks?
Yeah, that's a fair point, Paul. I think what I hear everyone talk about is everyone talks about capacity development and potential product innovation, because we're still grappling with all these new technologies and stuff like that. But the challenge is nearly the whole world has got 2030 targets. So we've got 8 years. So, how long are we going to start focusing on capacity development? When do we actually start seeing traction? And on that note, before I go to the questions, there are quite a lot of questions from the audience. I'm going to invite Marcel. Salam, Marcel. Sorry for I'm keeping the best for the last, Marcel. The whole financial sector is depending on the insurance sector to protect us from all these risks. Please share with us, Marcel, your views on what's happened. And
yeah, walaikum salam and good afternoon, ladies and gentlemen. Thank you for inviting me. Let me comment both as an employee of Swiss Re here in Malaysia and also in my role as a representative both of the insurance and takaful industry here in Malaysia. I mean, as a Swiss Re employee, in line with other multinational companies, we have naturally further strengthened our commitments in respect of sustainability. You just mentioned net zero. Our aim is to have net zero operations by 2030 and insurance and asset management portfolio by 2050. In Malaysia itself, we really support our clients, which are insurance and takaful companies, in their sustainability journey through assessment of their exposures, for example, from climate change, or also development of new products in respect of energy transition, like solar panel. Now, putting on my hat as an industry representative, it's a bit of a mixed picture. If I look at individual companies, some of them are already quite advanced on their sustainability journey, whilst others are really only at the beginning, I would say. But what has definitely changed in the past 18 months is the increased awareness amongst the industry about ESG sustainability. And I think the recent floods in December in Malaysia were a stark reminder what climate change can cause to the portfolios of the insurance and Takaful companies. And the floods were a bit unexpected because they happened in an area which was not supposed to be flood prone. And the amount was also very high, 2 to 3 billion industry loss. And that really also highlights one of the key challenges which the industry faces is really, and I look here only at the underwriting side and leave the investment and asset management aside, is, for example, to assess the exposure which they have, especially going forward from climate change, because data quality and availability is really not yet there. And also methodologies and tools to assess the effects, for example, of climate change are not so good yet. And everybody mentioned CCPT, which was recently issued by Bank Negara and which affects also the insurance industry. But the CCPT in its current form is really more geared towards banking rather than insurance. So there is currently an implementation group set up by Bank Negara with participation of various insurance group companies to see how it can apply to insurance as well. Now, on a more positive note, there were some developments in the past 18 months. One of them is by the Malaysian Takaful Association has followed suit the Islamic banking and has issued their own value-based intermediation framework, which naturally puts ESG also as a key component. And also just recently, last year, the Perlindungan Tenang voucher scheme was launched by the insurance and Takaful industry, which really targets the underserved and unserved segment of the population, and which, based on initial feedback, is very successful. And there are also new solutions, products being developed, for example, for the energy transition, such as the one like solar parametric product. So there are some positive developments, but we have to be clear that also on the insurance side, much more has to be done. But it's not something which can easily be done because, as I said, data quality, availability, also the taxonomy not yet geared toward insurance. So there are a few roadblocks which the industry has to overcome, but the association together with the regulator is working on it.
Thank you, Marcel. Paul, that's an idea for you to look at VC funding. We need tech companies to start looking at that data and start helping us collate data. I think that's an area that if VCs can look into, that would be great. So we have a lot of questions from the floor. What I'm going to do is I'm going to couple the questions with two questions of my own in terms of the direction of how I'd like you to answer it. Now, the first question very much relates to what Dr. Sharon was talking about, how PLCs being slapped on the wrists by American authorities. Greenwashing. How do financial institutions deal with greenwashing or misrepresentation or activities that are supposedly sustainable but are not, if one digs into it? So the question is, what can we as financial institutions do to manage greenwashing? And in your opinion, do you think it's the financial industry's role? I mean, at the end of the day, are we merely intermediaries? Is it somebody else's responsibility to deal with these issues? I'm going to open it to the floor. Anyone? Yes, Usam.
Greenwashing is an interesting area because I would claim that at some point in time, perhaps at the early stages of the development of sustainable financing and green financing, that greenwashing probably played a part in raising awareness. However, it doesn't justify the use of the term green or sustainable How do we deal with it? I think the regulators play a big part in that. Just like Islamic finance, Islamic banking, there will always be doubts whether this is fully Islamic, completely Islamic, Islamic according to who, how pure is your understanding versus my understanding versus his understanding versus this country's understanding. When the regulators come into it and they put the standards there, it takes quite a lot of the burden of facing consumers and criticisms away. So that, once we have regulatory definitions and standards for what makes up certain assets classified as green or climate friendly or climate compliant, then that solves some of the problem, takes away some of the burden of the problem.
Okay.
There will always be elements of marketing there to draw attention, to claim certain things. That happens I would say, in almost all sectors.
Okay.
The best car, the best drink, the best medicine, the best holiday, these are, things happen.
So Hussam, on that point, right? So if you were saying the regulators, and I'm not saying this because I'm part of the regulator, I'm just saying that the challenge that regulators face is that the financial institutions and players like Paul and stuff are the ones that deal with the economy. You're the one who engages with the economy, the real players and stuff like that. So should a regulator be sitting there deciding on a taxonomy, which may be too constraining? Isn't there an onus on financial institutions to also build at your own capacity? How do you deal with it? So let's say the regulator comes out with a taxonomy. Bank Negara's come out with it, SE's coming out with it. It's going to be very principle based. But what are you financial institutions going to do to build internal capabilities? What are the capabilities you have to avoid greenwashing? That's one. And two is the onus on you, or is the onus on institutional investors or the government? I mean, where's the onus?
I think what I said is that the regulators will take quite a lot of the burden, not all the burden.
Okay.
It will not completely take the responsibility away from institutions to have some responsibility when they talk to customers, when they market their products. That they are responsible, and what it says on the label is exactly what is delivered to those customers. How do we do it? I think it's also many things, the maturity of understanding the development of the market, how developed is the market and the consumers in that market, how developed is the other stakeholders in that society, in that economy, to understand this label. For example, if you want to say that green is a label, how do we understand it? Do we really, when we say, for example, a green credit card, does it really understood by everyone that this is, the most authentic green that is made up of completely biodegradable material, and every cent you spend there will go towards the environment? And if that is the understanding, and there's perhaps also there is a level of responsibility at the consumer side, that green at that level could mean that there is an element of consciousness when it gets to the design of this material, to how you use the card, how you spend it. And it may not necessarily mean that it is completely purely green. It just means that this is different from the rest of the groups of products of similar qualities or similar utility. So I think there is a shared responsibility there. It helps when there is a common standards as set by the regulators. And I give the example of Islamic banking products. Once you have the regulators clearly defining what is murabaha, what is musharaka, it takes away quite a lot of the burden of financial institutions have their own definition of what these terms mean.
Okay, cool. Thank you.
Maybe I can just add a bit.
Yes.
I'm sure Amir will also share. HSBC and others are quite similar. We're guided by international standards like IFC guidelines and so on. So when I started banking 25 years ago, it was just credit approval, and then you get it approved. Now, you have capital allocation, but you also have what we call an ESRM analysis. So we actually all our papers go through an ESRM analysis, where we have kind of almost a committee, depending on the approving authorities and all that, to review every product that we do for the clients. I can speak on behalf of the corporate side, but also on the retail side, there will be something similar. So we try to use capital as a force for good, meaning to say, because the banking, yes, regulators are responsible, and regulators, they could do a better job in certain areas. Certain countries are at different pace. That's fine. But I think for banks, because we control the capital. In a similar way as private equity or VC, there are two sources of capital. One is equity, one is debt. So we control the debt equity, that piece of it, and that has become a very big feature. ESRM analysis, and it's actually quite detailed. We go through this whole series, and will we catch 100% of greenwashing? Probably not. But we will at least get to a big chunk of it, and it's an evolving piece that we continue to kind of learn. And the paper, that analysis that we do, gets tweaked over and over again. So it's an evolving space, and we recognize there is an issue, but it is something that banks are responsible, and banks actually do control how the capital is allocated based on these analysis.
Okay, thanks, Mac. Amir, if you could answer a question that came from the audience as well, based on what Mac just said.
Yep.
You follow international standards. So the question is, there are international standards which may be too stringent for countries in ASEAN, right? So is it fair? And how do we balance that? Because, ASEAN countries, marketplace and ASEAN may have a different level playing field compared to the more developed countries. How do we build alignment, and how do you do it in HSBC?
Okay, so I think it's a pertinent point, both raised by Mac as well as Husam. And if I can just draw the analogy from, how do you say a certain product is Sharia compliant, and how do you say a certain product is, green or sustainable? And in the case of capital markets, which some of us are practitioners, so maybe I can draw a reference to that. You would have a fatwa or a Sharia pronouncement, as we say, and within those documents, you would see that they would say that this is the opinion of the respective Sharia committee. You should yourself seek your own guidance as to whether something is Sharia compliant or not, but this is the view of the learned scholars on that panel. So in that respect, and again, I draw back the reference to, because the question was specifically towards, how are you saying that your 51% is, if you do achieve it, is truly green? And that goes back to the guidance as well on disclosure, as well as second party opinion assurance, which I think is very important. So the first part is, the issuers, the companies, you need to disclose as much as possible. And on that note, the way Bursa gives you a FTSE for good score as well, they look at your level of disclosure. And the more disclosure you give, the more ability an investor is able to ascertain whether or not, this is truly, from their perspective as well, something which is green. And then you have a second party opinion provider who comes in. And in most cases, if you look at the second party opinion provider, they do say, are these KPIs ambitious? In the case of a sustainability linked loan or a bond, they'll say that this KPI is ambitious or this one is not so ambitious. And in the case of a green bond, they would say whether it's medium green or dark green or light green. So, you can therefore make your own assumption. Now, in terms of whether ASEAN versus the rest of the world, that's a fantastic point. And many a time, we have debated extensively when it comes to industries like, we were talking about palm oil, we were talking about coal-fired power plants. There was a comment in the chat box there about, the rising prices of energy. Is ESG a peacetime luxury? I think that was a fantastic question / comment. But, it is the case. When you do debate with these second party opinion providers, you do provide context as to what is achievable or what is fair in an ASEAN context versus what you would see in a more developed market context. And I can give you an example. When we're doing the Government of Malaysia framework, they were questioning about if you were to use the monies for electric vehicles or rural electrification, for example, what is the amount of energy that should be, they should be saving versus a normal sort of setup. So there was a lot of debates, what about sustainable farming? What are you using? Is it tilling? Is it pesticides? So these debates go on heavily. And for most of the time, they have their baseline of what they feel is acceptable. And when it doesn't, when it doesn't achieve that, then in some cases, we decide to just agree not to put it in the framework for now, or later when the certain standards are already in place.
Thanks, Amir. Thanks a lot. Paul, you wanted to say something?
Yeah, no, well, I did, but I think my fellow panelists have touched on some really great points and stole my thunder a little bit. So no, but in reality, I think essentially, I think greenwashing is ultimately a failure of measurement and accountability. People are able to greenwash because they're able to do all sorts of initiatives and activities without actually being held accountable for whether they're having any sort of real impact or any risk mitigation. So, I think that's probably the heart of the issue. Now, it sounds simple enough to say, okay, well, maybe we need to start measurement, but how do you measure? We're talking about different standards, and I think when people are talking about standards, it's always with an S. There are multiple standards that are floating around the world. There's questions about, are those standards applicable to specific regions like Southeast Asia? And the thing is, it's not like having, international accounting standards where generally balance sheets and income statements look largely the same everywhere around the world. Once you start getting into sustainability standards, and I know that there's been a lot of debate around, the International Sustainability Standards Board, those metrics could be highly dependent on a particular business. So obviously, the types of ESG risk that you would be looking at for, an energy plant would be very different than, for a food delivery platform. So, you're talking analog versus digital, you're talking about different industries. So, it just makes, the types, creating standardization around specific sets of metrics across all industries is an exponentially more challenging exercise for companies and for financial institutions. I think where financial institutions do come into play, again, I don't think it's up to the regulator to create those metrics and standards. And I don't think either companies or financial institutions that would have to measure and monitor them would want that. I think where regulators can come in is to mandate, minimum standards for reporting and disclosure. What they want to see as a sovereign entity and to maintain, the welfare of its citizens and its investors. But I think it's going to be up to a collaboration of, industry coalitions, financiers, to start thinking about, what those metrics ought to be. How do you measure them? How do you apply them to different companies? And so, again, that's an insanely hard exercise. It's things that people have been working on for quite some time. But again, when you look at things like, GENE or United Nations Principles of Responsible Investment, and then now you've got B Corp, you've got ISSB, there are just a plethora of different standards that one can adhere to. And for many organizations like, say Gobi, we actually partner up and we adhere to multiple standards. So then we have a challenge of how do we start integrating all these different standards together in a way that's consistent across as many of them as possible. If we try to please everyone, we're probably going to wind up with situations where certain measurements, certain metrics start to conflict with one another. How they're measured is going to start to conflict. So again, it is a big challenge. We're at kind of the earliest stages of that, I think, globally. But I'm confident that as standards start to converge and coalesce around a couple of key standards globally, I think it makes our job as financial institutions in assessing whether a company is greenwashing or not, it starts to get easier. It can't get any worse from here. It can only get easier.
Yeah, no, fair point, Paul. I think when you start having different standards and different sort of measurements, the challenge is then you spend a lot of time just focusing on disclosures and reporting and not doing the real business, which what you're in for. I would like to pick up your point on what you talked about collaboration. So there's a question from the audience, and again, open to the floor. Do you think the pace of sustainable finance in Malaysia is enough? Do you think we're doing enough? Or do you think we need to fast track? And, we're all saying the right things. You've come out with the right products. We're talking about capacity development, but are we doing enough in, say, 365 days? Or are we just looking at key milestones? Will we be able to meet those targets by 2030? Anybody?
Maybe I'll have a go at that. I think from the lens of an investment bank, where we see how do we further grow or expand this market or this space is essentially to further inject a lot of supply and demand for sustainable finance instruments and papers. And I think in this respect, the point that has been raised in the past is essentially to look at policymakers to play a major role in requiring a lot of the infrastructure and development type projects to be financed by sustainable or GSS Sukuk or sustainable financing instruments. And I think that would, of course, clearly signal the importance of sustainable finance to the wider market. And I think the other bit that we need to think about is product innovation, and that's going to be key to drive sustainable finance a lot more pervasive for the market. And I think today one of the challenges that we're having is that the alignments or the frameworks that we're looking at is very much very strict use of proceeds requirement. And I think a lot of companies and corporations, particularly within the emerging markets, are actually still in transition, or some of them are actually going through their journey, where in most or in some instances they are within hard to abate type sectors. And I think it will be essential for us to start thinking about transition financing and sustainability type or sustainability linked type instruments to help a lot of these companies and corporations to navigate them and to support them through their transition journey. So I think we need to think a little bit more from a product innovation perspective, and we've done very well the last 12-18 months in terms of building capacity and issuances. A lot more can still be done. I think we issued 8.4 billion in terms of green financing, GSS type financing for 2021, but I think it's only 7.6% of total issuances in the market. So I think when it comes to scaling up, there's still a lot that can be done. Product innovation is definitely one. Capacity building, to continue to push on capacity building and capabilities. And I think we also need to build a lot of awareness amongst issuers, investors, and market players.
Thanks, Dr.
Can I just add something also?
Yeah, sure.
Zarina, in terms of the demand, consumer demand, and banks are service providers. If the service recipients are low in demand, that demand cannot be manufactured. We cannot provide all the products that are not taken by customers or demanded by customers. They are not really. I mean, I'll give an example here. When we did the engagements with the exporters, SMEs, the response, I guess, big part of it is also COVID reaction and the priorities change, as I mentioned earlier. But the demand has to come from also from the service recipients, from the customers, from the SMEs, from the consumers, from individuals who would put that pressure that they want their products to be scrutinized, that they want their clarity in terms of the impact, they want transparency and all that. Until that happens, it will also, to make it always supply driven will be a challenge.
Okay, no, I agree. I think that's the point that I would like to bring up as well. I mean, we've talked about the role of the regulator, we've talked about the role of the policymaker, but at the end of the day, like you say, we're all intermediaries. You are providing a service that needs to have a demand. Now, the question is, what is the role of the public? What is the role of institutional investors? Shouldn't they be demanding? It has to come from somewhere. You're just playing an intermediary role. On that note, there's a question from the audience. They're saying, and it goes back to what Dr. Fadil mentioned as well, although we've done a lot in the space of sustainable sukuk, sustainable bonds, sustainability linked, we've done a lot in that space in Malaysia, but it still accounts for less than 20% of transactions, right? we still have a healthy amount of financial transactions that are going to companies that are not prioritizing ESG, that it's business as usual. So what do we do as a financial sector? To make this shift, do we penalize, or do we educate them on the opportunities that will come about from transition? What is the fastest or most effective tool that we could utilize now to have a faster pace in the shift? Anyone?
Dr. Charon has his hands up. Sorry.
Yeah, I was thinking, you have your hands up, you didn't say anything.
Oh,
No,
no,
I think it's about, maybe I'll just jump in. It's all about
Time on, but I was going to say a couple of things. Sorry, can I?
Yeah, please go ahead. Please go ahead.
Oh, sorry. Firstly, a plug, right? Next Wednesday is the MIDF Green Conference, where we will have green issuers, green investors, and all those concerned with all policy questions with all things green. It's next Wednesday, and Google MIDF Green Conference 2022, and we'll have all the details. But getting back to the question of how do we get everybody going more green? It's, we can't even agree on what's not green. Banagara's taxonomy does not say coal is not green. Mm. European Union can't agree whether gas is green or not green.
Yep.
Now with no gas from Russia, it looks like the European Union is going to allow coal, and everyone's going to start burning coal all over again. So it's not an easy thing. And I love I know we're talking about ESG as well. If you put the social bit, let's look at the palm oil prices, right? We all said there's a big ESG discount on palm, and it's true. Palm oil was 2,000 ringgit last year. It's been going up and up and up. And in the past, as soon as palm oil goes up, palm oil company prices go up, and it didn't, right? Until February, in the middle of February, when it suddenly hit 5,000 ringgit. Suddenly, all green went out the window. So palm oil has gone from 5,000 to 8,000 ringgit, and palm oil company stocks, the palm oil index has gone up 18% at that time. So at some point, people decide money means more than green. And in the case of palm oil, you can quantify it. 5,080 ringgit per ton is when green no longer when ESG no longer becomes important. So we've got these issues going around, but how to make people more green? The Mark Carney kind of way is to say that it is all the market thing. Let's put a green tax on it. Let's make ungreen things expensive and green things cheaper, and therefore the market will decide, and they'll get people going. But we have to look at what's going to happen, and we have a real test case now. If oil goes to $150, or if oil goes to $200, the market is telling you don't use oil, right? Go green, go away from oil. But will governments react? What will governments do? Will they tell all the people that petrol is expensive, stop driving cars, go green? Or will the government start subsidizing? I'm no political expert, but I think it's more likely than not that the government will start subsidizing, right? Now, if you really believed in green and the market is telling us, and really, it's a really big messages from the market that oil is at $200 a barrel. Don't use oil anymore. Go use some other alternative source of energy, but it's not going to happen. So, back to answer your question, I think it has to be both a mix of market forces, whether it's real market forces or whether it's some kind of carbon tax or carbon tax or some carbon incentives if it comes to lower income tax, but also both have to go. But after a while, people are getting more green. Right? They just are. And if you ask any businessman now, if he's doing something new, he won't do something which is bad for the environment or emits a lot of carbon. He just won't, because he knows it doesn't make so much sense. Although having said that, though, there's still a lot of money to be made investing in Chevron or Exxon. Prices are still going up. So perhaps we should all just start a black fund, and just invest in carbon. Now's the time to buy carbon.
Exactly.
No, it's not. But these are the issues. But again, these are the issues which will be discussed at next week's Green Conference by MIDF. But they are interesting. But thank you, Zelina, for inviting us.
No problem. Mac, you wanted to say something?
Yeah, I kind of forgot the question now. The Sharon. No. Just no. Yeah. I guess what I was trying to say is, and you know, we accept the fact that we need to learn how to walk before we can run. So no one's going to turn green overnight. So you know, by having the right KPIs and third-party validation and stuff, you kind of give them time. And also, I mean, you can't really just turn off the tap on some company, because what about the employees? Then you're actually introducing a social problem for kind of unemployment and stuff like that. So you know, it's really kind of intent has to be there, KPIs have to be there. So we kind of walk them through this whole process. I'm not asking everyone to be net zero tomorrow. It's a journey, and you know, commitment to the journey will make a big difference.
Yeah, you're absolutely right, Mac. I think it's a transition. The question is that we need to quicken this transition phase so that things become more effective faster. On that note, gentlemen, we've reached the end of our time. Thank you so much for joining me today. I hope all of you got a chance. I do apologize if we didn't go through all the questions from the Q&A. What we'll do is the CMM team will curate everything. We'll try to respond to everything and then send an email out to all participants. Thank you very much for joining me, gentlemen. I really appreciate your time. Thank you for the audience for joining us. Thank you very much, everyone. Have a good evening. Bye.
Thank you so much. Bye-bye.
Thank you.
Thank you.
Thanks, Alina. All the best to you.
All the best.
Thank you.
Thanks.
Thanks.
Bye.
Bye.
Right.